Hi, this is LW Global Finance. Welcome to today's deep dive into the global markets, where we break down the stories that move the economy, Wall Street, crypto, and more.
You know, for decades, it felt like the world ran on this one big idea: open trade, right? Well, that era, it's pretty much over. Today, we're diving into the massive shift that's replacing it, as these economic walls start going up all over the world. And really, it all comes down to this one question. I mean, for most of our lives, we've heard that globalization was the future. But now, all of a sudden, nations are scrambling to protect their own turf, building all these new kinds of economic walls. So what changed? What's going on?
So, there's actually a name for this whole phenomenon. We're calling it the sovereignty squeeze. Just picture this. It's like a vice tightening on the entire global economy. This intense pressure that's forcing every single nation to suddenly scramble and protect its most vital interests from threats both old and, well, some very new ones.
Okay, so what does this squeeze actually look like in the real world? Let's take a look. Our first example is going to take us right to the heart of Europe, where a really foundational industry is, well, it's on the brink. We're talking about the chemical sector.
And the head of Europe's Chemical Industry Council, Dr. Ilham Kadri, she did not mince words. She called it, quote, a perfect storm. So what exactly is brewing in this storm?
Well, for starters, there's a massive energy problem. Just look at this number. Energy costs in Europe are a staggering 4 to 5 times higher than in other places they're competing with, like the US. I mean, that's not just a challenge, that's a crippling disadvantage right out of the gate.
And well, the result is pretty much exactly what you'd expect. The data here is crystal clear. Over the last decade, Europe's slice of the global chemical market has just plummeted by 11%. So where did all that business go? Yep, you guessed it, right here, to China, which has surged by 9%. We are literally watching a direct transfer of economic power happening in real time.
And look, this isn't just about numbers on a chart. This has huge real-world impacts. Customers are getting skittish, orders are being delayed, companies are cutting their forecasts, and actual factories are shutting down. The total damage so far, over 11 million tons of industrial capacity, just gone, vanished. Okay, so when you're faced with this kind of intense pressure, how do nations even begin to fight back? Well, we're starting to see two very different strategies pop up. On one hand, you've got these old-school alliances built on physical goods, and on the other, these new-school defenses built around, you guessed it, digital borders. So on one side, you've got the UK. They're proposing a proactive alliance for steel to counter China, a classic physical trade issue. But then on the other side, you have Canada, and they're scrambling to react to American dominance in digital finance. See, two different squeezes, two very different defensive plays.
The UK's idea? It's like something straight out of a classic playbook for dealing with a physical threat. Step 1, team up with your allies, right? The EU, maybe the US. Step 2, get everyone on the same page with tariffs to push back against China's overproduction. And step 3, you create this exclusive club with special trade terms just for the members. They are, in effect, proposing a modern economic fortress.
Okay, now, to get what's happening with Canada, we need to quickly wrap our heads around this term, a stablecoin. It's actually pretty simple. It's a type of crypto that's designed to hold a steady value. And it does that because it's tied, or pegged, to a real-world asset which, let's be honest, is almost always the US dollar. But here's what's absolutely wild. Just how total this dominance is. Take a look at this chart. That tiny, tiny sliver, that represents every other currency in the entire world. A staggering 99% of the whole global stablecoin market is pegged to the US dollar. Now, if you're Canada, that is an overwhelming financial force right on your digital doorstep. No way around it. And then the pressure really cranked up a notch. The US went and passed something called the Genius Act. Now, this is legislation designed to regulate digital assets. What it did was create this clear, really attractive rulebook for American stablecoins, giving them this massive head start and basically making the US digital dollar the default choice for the rest of the world. And this quote here from John Ruffalo of the Council of Canadian Innovators, man, it just sums up the fear perfectly. If the Canadian government doesn't get its act together and fast, then Canadian money and financial control will just drain away south of the border. That's the sovereignty squeeze, but gone digital. All right, so let's recap. We've got a chemical crisis in Europe, a potential steel alliance brewing with the UK, and this huge digital dollar dilemma up in Canada. So when you start connecting these dots, these seemingly separate stories, what does the bigger picture of this fight for control really tell us?
This table really lays it all out beautifully. Just look down that threat column. You've got high costs, overproduction, digital dominance. Now look at the response column. Policy demands, trade alliances, rushing out national regulations. The threats are all different, right? But the core struggle, it's identical. It's all about defending national economic control.
So what should we take away from all this? I think there are three really crucial points. First, global competition is heating up, and it's happening way beyond traditional trade. Second, we're seeing these new economic blocks forming around both physical stuff, like steel, and digital finance. And third, and this is the big one, defending your country's economic sovereignty is suddenly at the very top of every government's to-do list. And all of that leaves us with this final, kind of provocative question to chew on. In this new era, with all this intense economic pressure coming from every direction, is trying to go it alone even an option anymore?
Thanks for tuning in to LW Global Finance. What's your take on today's market moves? Leave a comment, share your thoughts, and don't forget to follow us for more updates and analysis.